Hi, I'm Kep Kepner, CPA here in Dallas. I'm going to give you some reasons why you might want to consider an S Corp. In the first place, you have limited liability protection. Isn't that great? The reality is about that, most banks will require you to sign personally on any kind of loan. You go buy a car in the corporate name, it's going to want a guarantee. You go get the American Express bill, and the American Express is going to want an owner or officer guarantee. So the reality is you may protect yourself against some liabilities, and you may separate the liabilities of the S Corp from other entities that you own. The reality is you've got to be careful about that because certain liabilities you'll have regardless. The second thing is easy transference of ownership. All you have to do is say, well, I'll sell you 100 shares of my corp, and you now have a new owner. That sounds really easy. The real issue is that a new owner has to understand everything you're doing. And if you're a single owner S Corp, and you bring on somebody else as a partner owner of your S Corp, then your S Corp is not 100% yours, and you have to operate a little differently. Those lunches with your wife that you call business lunches, you probably can't do that if you have a partner. Okay? The wife's car or cell phone or other kinds of expenses that are run through your corp, you probably can't do that when you have a partner because that would be unfair. So the reality is, even though you can bring on a new partner and an owner and it's easy, there are all those other considerations. An S Corp has unlimited life. So if you die, your S Corp lives on. Your estate will own the stock in the S Corp, or whomever else are owners will own that. Somebody else can take over your business simply by buying the stock. So that is one advantage to an S Corp. However, what if you develop a whole bunch of losses in your corp and you're writing off stuff and you've got tax liabilities? Many buyers would not want to buy your S Corp, they would just want to buy your assets. So even though it has an unlimited life, that may not benefit you. Another reason, it's a pass-through entity. That means the company itself doesn't pay income tax. You do as an owner. And that can be really good for you. The reality is it can also be really bad for you. It depends on all the intricacies of your business and your profitability. An S Corp will have the year end that's the same as its owner, which is normally the end of the calendar year. But you may have a reason why you have a corp that needs to have a June year end or an October year end. You can't do that with an S Corp. It's easier to raise capital with an S Corp. My answer would be, who says? Well, maybe if it's a really successful business, then it might be easier to raise capital because you can raise capital from people who want to be owners. Can't be too big because you can only have 100 owners in an S Corp. But the reality is raising capital depends on the underlying value, which is in the business you have, not the form of the organization. Having an S Corp may give you more credibility. That's a great reason. I'm an owner of an S Corp. Well, that's great. And the only people that know about your S Corp is you. If somebody knows you to be an honorable, ethical, moral, savvy business owner, they'll feel that way about you if you have a sole proprietor, or if you have an S Corp, or if you have an LLC. So you would have that credibility if that was you. On the other hand, if you're a cheater, a liar, or a scumbag, your S Corp isn't going to have any credibility because people will know you to be who you are. If you need help in this area, let us know.